Okay, now first of all, am I here to teach you about fib? No. All I want you to note is the key levels that you should be looking at for the fib. Okay, those key levels are, let me just put it on the screen. Look at 0.618, 0.382. Okay, these are, okay, let me just make this green and make it big. These are the two levels that I want you to be focused on during the course of this training, or when you are using this tool. Okay, 0.618 and 0.382. Okay, now these levels are the retracement of every of the move of the market, the price retracement at 61% and 38%. Okay, these are very important. Okay, now you can do this for any time frame. Okay, on any time frame, on any chart. Is that clear? So how do you now place your fib? Because how to place your fib is very, very important. Now, first of all, you need to know where the market is coming from and where it has gone to. Please note where the market is coming from and where it has gotten to. So those are the two information that you need. Now, looking at this chart, market came from this high, and it came all the way to this low. So since market has moved from this point down to this point, what you now need to know is the possible areas that market can come back to. Okay, that for you, that's where you can be able to enter your trades. Okay, now one thing you need to do is to pick up your fib. My fib is custom built. I will definitely show you the customs that I did on it. Just take it. Once you take your fib, identify the highest point where the market has gotten to. If you are drawing for a downtrend, identify the highest point. Please go and direct this person. Sorry about that. Okay, now identify the highest point price got to and click on it and drag. Okay, and bring it down to the lowest point price got to. So you take the fib from the high down to the low. Okay, this is Fibonacci retracement 2. Okay, now let me just eliminate this my median line. So can you now see that when price was coming down, immediately it got to the 0.38 area. Okay, now look at, immediately price got to this level. Price got to that level, something happened. Let me make it a little bit bolder. Immediately price got to that level, something happened. It was coming down. Immediately it touched the 38%, it started going back up. When it came back and touched the 38% again, there was a reaction. That's a sign that at these levels, price tends to react. Okay, now, originally, this is how the fib is going to be. Originally, this is how the fib is going to be. Let me show you. So, originally, this is how your fib is going to be. There would be background. There will be something like this. And this reverse, it will be like this. Okay, this is how it will be. And you will see that price moved and came to the 618 and it retraced. Okay, now for me, I use the reverse of the fib too. Okay, I use the reverse. So my 618 is at the bottom while my 38% is at the top. Okay, so I click on reverse and that is how it is, and I try as much as possible to eliminate the backgrounds. Okay, but if you like all those colors, you can leave it so you can enjoy how colorful the screen is. Some of us like colors, you know. So that being said, immediately price comes back up to the 618, you look for a possible sell. Now price moved from here down to this point. Then do I see another high? Yes, I did. So I can now say, okay, let me take this high, because sometimes you can take a certain level. Okay, let me just put another fib. So we are trying to look for the best entry. Okay, now if you use this at 0.83 levels, it's a very good point for you to enter a sell. So let me just put a mark, a line there. Now please note the figures that are appearing after the 618, which is after the 618 fib, the ones that are in the bracket either on the left hand side or on the right hand side, is the actual price of that level. Okay, now immediately you see it. Okay, now you see this line. That 83 is a very strong support, because it was a support at this level, support at this level. So this is a very strong area. So when price gets to that level, it's definitely going to retrace. So now, will you rely on only this one? No. If you are like me that trades high frequency forex, this is what you do. Do you see another high? Yes, I do. So what I do next is I take this high as well. It will always deliver. Take this high to this low. Now I have a new area. Okay, let me just remove the background. So let me remove background for all my feeds. Okay, now from this level, what price right now? The 618 is at 0.78 areas. Okay, at 0.78 areas, you look for possible what? Sells. So is that all? Is that the high? That, look at the second one. Okay, let me just remove the first one. So removing the first one, look at 0.78 areas. So 0.78 areas to 0.84 is still a good point, because in forex we don't look at just one price, we are looking at an area. Please remember that everybody is looking at one point, but okay, if I put it at exact point, I think it's almost the same. It's at 0.79. So this is an area, not just a point. So I'm going to put another line there, so that I can know, okay, that's the second move. So let me just color code this with yellow. Okay, now do I still see another high that he made? Yes, I do. So I bring it down to this high. Immediately I bring it down to this high. Where is the 618? Simple. I just identify the 618. Boom. And that is how we enter that trade and we cleared it. So let me color code this green. So can you see that it will respect any time zone, any of the eye that you choose? Look at how price came into these 618 areas from this level, guys. We took it from this high. We took it from this high. Why did I take that high instead of this one? Because look at how price moved. Price moved from this point to this point, and it made its retracement. Price moved from this point to this point, and it made its retracement to the upside. So this is the floor. Okay, this is now the floor. So price broke this floor. So what should I do? Since price has broken this floor, I wait for it. When price broke the floor at this point, at this level, I wait for price to make a new floor, and the new floor that he made was at this level. This is the ideal floor that he made. So now that I know that price came all the way to this level, okay, now, all right, we can also say that price, hold on now, so we can, okay, this level is higher than this level, so price came all the way to this level. So from here, price now made a fresh move. Okay, let me see if this is accurate. I'm going to put a line there. If it was equal, no, it's not an equal low. It was not an equal low at all. It was not an equal low. So this is the new floor. This was the previous floor. He broke it, made a new floor here. So right now, I'm taking my point from this point to this point. This is now the new high, and from this point, oh, sorry about that. From this point to this point, that's what I'm looking at, all the way to this point. So I saw that price extended. This is just a shallow retracement. This is like 25% retracement of this move. So I took this point. Okay, so when it came back to 618, that's when you take the trade. Can you see it now? So I'm going to remove all drawings now. Now, this was how price moved. This is an high. It came here, formed a low. It came here, formed an high. It came here, formed the low. It came to this point, formed an high. It came all the way to this point, formed the low. It came here, formed an high. Came here, formed the low. Came there, formed an high, and it came here. So let's take the rules. Okay. In drawing fib, for a downtrend, draw from highest price to lowest. You draw it from the highest price to the lowest. Okay? Now, for an uptrend, draw from lowest point to highest point. Okay, those are the rules. Simple and easy. Either you draw from the high to the low for a downtrend, or from the low to the high for an uptrend. Okay, now let's see if it is true. Let's see if it is true. When you draw it, what happens? Now take your fib. This is an uptrend, right? Where did price retrace at? Price came back to 38%. Can you see? Price came back to 38%. First, it came to 618 and it went back up. Guys, see this. See this. I drew it from this low all the way to this high. So from here to this high, that's what I'm looking at now. Because I want to take some possible buys as well. So now, see what happened. It came up to 38% and it smacked down. So when it came back up, it broke 38%. Went all the way to this point. So when it got to this point, it came back to 618, which is this level. And it started pushing up. It broke all the way to 38%, and it started going up. So can you now see that you can take either buys or sell on a trend? When the market is going for the pullback, you can see some moves on the pullback because you are trading high frequency forex. You just need to be right in some few minutes, either 1 minute, 2 minutes. Is this simple enough? Yeah. So all you need to know is what area I should enter at, and the places you should enter is 0.38% or 0.618%. Those are the levels. Now the fib draws the support and resistance for you. So looking at what you are seeing on the screen, you can see that this is actually a very sweet support and resistance system. Look to the left, to the right. To the left, to the right, you see that it's a very, very sweet support resistance. When I mean sweet, I mean a very, very efficient support and resistance.
Excuse me.
That
when you use because the weeks count.
Yes, because you are looking at the highest or lowest point price got to. So when you are drawing your fib, you should make sure you are picking it from the high, which is the week, to the low, which is the week.